Welcome back to Market Pulse. Today we're joined by Ben Samuel, editor of Energy Markets, to discuss the latest in European gas. With this story rapidly moving up the headlines, we've brought this episode forward. As always, our discussions are market focused and are not intended to comment on politics. Ben, the gas markets are once again in the spotlight, particularly with the outbreak of the war in February and the damage it's caused to energy infrastructure. How important is Qatar to European gas supply?
Hi, Venus. So it's a falling proportion in terms of European energy supply. So if we go back to 2019, for example, something like a quarter of all LNG supply into Europe was coming from Qatar. Last year, that proportion was down to 11%. For the UK, it was even smaller, something like 8% of our LNG was coming from Qatar. But certain countries are more exposed. So, for example, Belgium and Italy, the proportion of their LNG imports are much, much higher than the figures that I've just described. Qatar Energy has already said to buyers in both of those countries that their contracts are going to be affected for the next 5 years or so. This is due to damage of Qatari LNG export infrastructure as a result of Iranian strikes. So, it's not even across the continent. Different countries are affected in different ways. Having said that, if we look at kind of the amount of gas that's being taken out of LNG terminals in Europe at the moment, there hasn't been much of an impact. In fact, if you look in, a lot of markets, there's actually been an increase in supply in terms of the actual gas going into grids from LNG terminals than there was before the war. Having said all that, obviously, the longer this goes on, the more likely we are to see disruption, and things could get a little bit sticky later on in the summer. For Asia, it's a completely different story. So something like 30% of Asia's LNG imports are coming from Qatar. Asia accounts for something like 75% of the world's LNG imports, full stop. It's extremely or the largest region in terms of consumption of energy, which you might expect given the population. So for Asia, the situation's very, very different, and they've seen this big drop off because gas markets are increasingly globalized. An increase in wholesale prices in Asia will be reflected in European markets as well. Basically, the way LNG works is that a lot of it is contracted on a long-term basis, but a lot of it, and increasingly now, over the last few years, a lot of LNG has what's referred to as flexibility in terms of the destination. So what happens when you get a situation like this is that you'll see an increase in wholesale prices in Asia as buyers look to attract that flexible LNG supply, and then you'll see a corresponding increase in Europe as we try and compete for those spare cargoes.
And as of Sunday, the US has implemented a blockade. What's been the impact of the blockade so far?
Well, so in terms of the material impact on LNG supply, it has not made any impact at all because even prior to the blockade, no Qatari LNG was actually moving through the Strait of Hormuz. Having said that, the market is extremely sensitive to the headlines at the moment. So on Monday, obviously the day after the announcement of the blockade, we saw this big price spike. That was also related to the fact that, the negotiations in Pakistan didn't really kind of go anywhere, certainly in terms of but any resolution on a short-term basis. So we saw this big kind of uptick in terms of wholesale prices on Monday. Since then, prices have come back down again. Again, this is kind of largely driven by the headlines and the expectation that talks between Tehran and Washington could resume in the next few days. So even though, as I say, there's no material impact on LNG supply, the market is really, really sensitive to any news around this issue, much like it was back in 2022 when Russia invaded Ukraine.
And how are key consuming countries such as China reacting to the crisis? You mentioned Asia.
Yeah, so as I say, Qatari LNG is really, really important for Asia. Um, China is a bit of an outlier. So China is the world's largest importer of LNG and indeed, the world's largest consumer of energy and sort of various other things. But they've been in the position where actually they've been re-exporting a lot of their LNG to its regional neighbors. So in particular, South Korea, also Thailand as well, but also some of the other countries in Asia. So China is actually kind of taking advantage of these very, very high wholesale gas prices in order to kind of supplement some of their neighbors. You could say that this has come at a sort of fairly fortuitous time in terms of Asian demand because April is what is known in the gas market as a shoulder month. Basically, temperatures have risen, since the winter to the point that, heating is no longer a concern in places like northern China, for example. But temperatures aren't so high that you have this big boost in power demand because air conditioning usage ramps up. So we're in that kind of position where, Asian demand usually is relatively weak. Having said all of that, kind of at least 8 countries in Asia have enacted policies to basically artificially reduce demand, some shorter working weeks, kind of encouraging people to, cycle rather than drive or whatever it is. This even includes Pakistan, which less than a year ago was basically in the opposite situation. They were overcontracted on their LNG. It was all to do with actually rooftop solar. So the Pakistani government had a lot of policies in place, basically to incentivize people to install solar panels on their rooftops. It was so successful that it wound up denting Pakistani electricity demand. And all of a sudden, all of these utilities who had contracted LNG from places like Qatar, all of a sudden didn't need the stuff because they didn't need to produce as much electricity in their gas-fired power plants. And so, less than a year ago, Pakistan was basically trying to kind of sell off these contracted imports pretty much at a loss to the price they would have paid for them. And look, what a difference kind of, a few months can make in the energy markets. Now they're in the opposite situation. I think Pakistan has imposed a 4-day working week. Also reduced schools as well. I think are only open for 4 days at the moment. A lot of this will also have to do with oil as well. It's not just natural gas that's been affected, but certainly we've seen a big shake-up in Asia, even though this is a period, as I mentioned, where demand is typically kind of relatively low.
Hmm. How does the situation compare to Russia Ukraine, where arguably the impact was more severe?
Yeah, so from a European perspective, um, Russia used to be a much bigger supplier to Europe in terms of gas than Qatar is currently. So before Russia invaded Ukraine, about 40% of European gas supply was coming from, Russian pipeline exports. And now it's, kind of significantly less than that. We're still getting quite a bit of Russian gas in the form of LNG, but pipeline gas isn't really coming. It only comes through one route through Southeast Europe, and it's a relatively negligible, amount compared to what it was, as I
Hmm.
say, back in 2020, for example. So the price spikes haven't been as severe as they were back in 2022, or indeed even in 2021, sort of leading up to the invasion. Um, if you have a look at sort of where the wholesale prices were, in Europe, if we go back to, for example, February of this year, before the start of the war in Iran, and you looked at prices for delivery over the remainder of 2026, so you think about, over the coming summer, Q4, something like that, prices were still sort of double the level they were in February 2021, i.e., a year before Russia invaded Ukraine. So you could argue that that conflict in Ukraine has still had a kind of lasting impact on, the wholesale energy market in Europe before this crisis. Prices still kind of double where they were 5 years ago. If you look, or if we think about pricing again, kind of before the start of the Iran war, if you look at prices for delivery, kind of further on in the future, next year, 28 and 29, they were starting to approach the sort of levels that we enjoyed, before Russia invaded Ukraine. But of course, now everything has spiked back upwards again, due to the situation in the Persian Gulf.
Hmm. And if disruptions persist, how do things look in the context of increasing global energy supply?
So this is a really good question. I mean, kind of running into this, the whole narrative around gas markets was about the next wave of kind of massive LNG capacity expansion. So, between now and 2030, there was an enormous amount of new capacity coming online, in particular in North America, the US, and Canada as well, but also Qatar itself, which was in the process of doubling its LNG export capacity. So, a lot of people were talking about how, eventually we're going to get into a situation where the market is completely oversupplied and that wholesale markets, prices will come down quite rapidly in the coming years. All of that looks a lot less certain now. To put things into a little bit of context, Qatar has the ability to export sort of between 100 or 110 BCM of LNG. The amount of LNG capacity expected to come online this year was about 40 BCM, and next year it's another 60. So, that's your 100, although it's worth pointing out that 10 of next year's increase was, kind of meant to be coming online in Qatar. Obviously, that looks a little bit dubious now. Sort of having said all of that, there's a difference between kind of commissioning a project and it getting up to full operation. So 40 BCM coming online this year doesn't necessarily mean that, all of those plants will be up to full capacity immediately. There are always teething problems with these things. There can be delays and all the rest of it. In terms of kind of how the sort of balance is shaken up, it all depends on obviously kind of how long the war will go on for, and in particular how long the Strait of Hormuz is effectively closed to Qatari LNG exports. So there's various kind of predictions floating around. One thing I've read, will be kind of back to normal, or in terms of sort of the lost capacity that's been damaged by Iranian airstrikes on Qatar. That will be kind of offset, by sort of 2028, something like that. Other predictions, call for a sort of longer disruption. I mean, I suppose the truth is that nobody really knows. It depends how long this thing drags on for. But certainly it's an interesting shift in the narrative. We've gone from this expectation that, all of this supply would come online. The market would be kind of massively oversupplied, if you like. There'd be more kind of supply than there would be demand, but we would see this big contraction in wholesale prices. But of course, this war has thrown a massive spanner in the works of kind of that narrative. And now, things are looking very, very different. And, there's an incredible amount of uncertainty about sort of where prices go from here, and particularly, where supply goes from here.
Ben, the North Sea is back in focus, particularly here in the UK. How feasible is it to increase gas production from there?
Well, so so this is a big one that's being talked about, in the UK media. It inevitably does whenever you get a situation like this when energy prices spike. So there's one field which is called Jackdaw. Potentially that could start producing later this year. At the moment, it's kind of in the process of an appeal is going through the courts at the moment, basically about the environmental impact assessment and whether or not this needs to be looked at again. So whether or not it happens, remains to be seen. But potentially it could start producing later this year. In terms of how much gas we're talking about, it could be something like 2% of UK gas demand. So, not nothing, but in the overall context, sort of relatively negligible. Um, in terms of kind of future supply, there's this slight misunderstanding about the licensing process. So it's not that North Sea licensing has completely halted. You can still get a license to exploit a new field as long as that field can be tied to existing infrastructure, i.e., pipelines or platforms that are already in operation. And there has been one application to secure a license like that. But at the moment, new field drilling basically remains effectively banned. Should there be a massive change in policy, it kind of seems unlikely that we would get in a situation where, for example, where we'd see a sea change in terms of UK natural gas supply. So if you think it's been over 20 years since this country was self-sufficient in terms of natural gas production, any new fields that may or may not come online in the future, likely what they would be doing would be offsetting existing fields which are kind of declining at the moment. So we still produce around about 40% of our natural gas, but a lot of those fields still in production are coming to end of life, and so are sort of slated for closure in the coming years. Um, I suppose kind of a more pro North Sea policy approach, could help to offset some of the bleeding. So the expectation is, by the end of this decade, we will be reliant on something like 80% of our gas will be kind of imported. The big question mark in terms of, the climate change transition is around heating, and how do we go from, 70, 80% of our heating coming from natural gas to kind of completely decarbonizing that. We don't really seem to have a kind of very clear answer at the moment. But perhaps the North Sea could help, stop some of the declines that we've seen. But certainly, it seems very unlikely that we'd have this kind of this massive wave of projects coming online, and that we would all of a sudden be self-sufficient in natural gas supply, even with kind of very pro sort of North Sea policies, which we obviously don't have at the moment.
Hmm. And Ben, finally, are there any other concerns on the horizon that people should be thinking about?
Yeah, so gas storage levels are pretty low by normal standards. So normally, what happens, or what usually happens, is that we add gas to storage sites. Normally, these are kind of depleted fields, or also sometimes salt caverns or various kind of underground facilities. So what tends to happen is that we put gas into storage during the summer when demand is low and also prices are low, and then we take it out in the winter when demand and prices are obviously much higher. Um, EU sites at the moment, they're something like 30% full, which is, kind of fairly low, considering where we were at this point in the last few years. And so this has a knock-on effect. So we're expecting to see obviously less LNG coming to Europe from Qatar, potentially none over the summer months. And so that, is a bit of a curtailment there. Maybe this will mean that the storage injection pace will be a bit low. And then what normally happens in this kind of situation is that, you get to Q3 heading into Q4. And when storage levels are low, everybody starts panicking. Is it going to be cold in October, November? What happens if we have to take a load of gas out of storage early on in the winter? And this can have a knock on effect on prices. So that's another big area to watch out for. So far this summer, the pace of injections or the additions to gas storage has actually been higher than during the same period last year. But we started from a kind of lower base. So now we're about 30% full. I think at this point last year it was 35% full. And sort of bear in mind that was relatively empty in and of itself. So we're kind of not where we would like to be in order to be comfortable, but nobody was expecting a disruption like this. And everybody, as I mentioned earlier in this talk, was kind of banking on, this huge wave of LNG supply coming online and sort of becoming a bit less concerned about storage than they usually would be. All of a sudden, that's back into focus for gas markets.
Okay, great. All right. Well, thanks so much for joining us today, Ben. And thanks for everyone else who's tuned in. We look forward to seeing you on the next episode of Market Pulse.
Thanks, Venus.